welcome to what I would expect to be an interesting evening on a topic which has once again come into the limelight. So it's very, very topical, I would say. So let me introduce to you the three wise men. Debashish Basu is well known to all of you through his co-authoring of the two bestsellers, The Scam and Absolute Power, with his better half, Sucheta Dalal. He is a CA with 35 years of experience and as a journalist, columnist, and author of several books apart from The Scam and Absolute Power. Uh, he has written for Times of India, Business World, Business India, Business Today, Financial Express, and Business Standard. I picked up this entire thought process came from Debashish's article in Business Standard, which he shared with me, and I have shared it on my timeline. And in his typical no-nonsense style, he has attacked the regulators, rightly so. So that is, he will probably giving us more insights from the regulation point of view. Our next guest is Farquan Mohar Khan, who was an investment banker in his previous avatar. Currently, he's a staff writer with the Morning Context. He covers policies, financial markets, RBI, banking, among other areas. He has had a ringside view of the financial jungle, always looking out for stories which will interest us. And his recent story titled Inside the Rot at Axis MF, which again I've shared it on my timeline. I'm sure we'll get some juicy tidbits about this episode from Farquan. Then the third wise man is Manoj Nagpal, who is the MD and CEO MD and CEO of Outlook Capital, and a familiar figure on the media, electronic as well as print. He brings his insights of the industry over 2 decades he spent, and so he should be able to give a third perspective. So once again, thank you, all of you, for having agreed to my request, and it's really a pleasure and honor to host you. My name is Vijay. I have been in the capital markets for 3 decades, and somehow I have survived. So, as I call myself, an old bandicoot. Today, my co-hosts are my friend Vinay and Abhishek, both of them budding stock market traders who help me regulate the Q&A session. We are recording this session, and even if there is a crash, my friend has assured me that we'll have the recording independent of what happens. Typically, Twitter crashes more often than markets. This is a old joke, but this I keep repeating. And we have had really bad time as far as Spaces is concerned. But then Spaces has got a bigger salience, and bigger audience. So we necessarily have to do it in Spaces over Clubhouse. So if by any chance the session crashes, kindly wait for a few seconds. We will restart it. That's as far as the introduction is concerned. The schedule of the program would be as follows. I have a set of questions and points which I will request the three wise men to expound on. I basically have about 7 questions or areas. These encompass from the current imbroglio to the role of regulators like SEBI, AMFI, industry bodies, and possible solutions. Before that, the risks associated with the mutual funds, and finally, what should investors do? So we start off with the problem and try to arrive at a solution. So this discussion, of course, will be an appetizer of sorts. The question answers which will follow will, I think, from the audience will whet our appetite. This session will not last more than 60 minutes, is what I promised Debashish. Last time also I promised that way, and it went on, and he was very patient. And I think his dinner went cold, and I think. Things. I mean, I was really very apologetic about that. This time, no dinner. He'll be well in time by 6:30, because the other guest also, Farquan, also wants to leave by 6. So let's just dive deep, headlong into it, and so we'll have it for about 45 minutes, and the question answer for 45 minutes. So my first question is the title itself. It's also the concluding question. We start off with the question and try to answer the question at the end. But before I ask the first question, as we have this standard disclaimer, I'm assuming none of the three speakers has a red Lamborghini. Farquhar, I hope you have sold your Lamborghini. If you have already.
I have no Lamborghini. I have no Lamborghini.
Lambretta only. Lambretta scooter. Okay.
my car is on loan with Bank of Baroda. You can check that.
No, you can have hidden it somewhere. Okay. Anyway, thank you. So the first question, which is to all three of you, is Debashish, mutual fund, Sahi, yeah, Nahi. Just yes or no, and then we will go to the next question.
Yeah, I don't think one or two episodes can lead you to a conclusive. As I said, it would amount to throwing the baby with the bathwater.
Correct.
So there are 40, 44, 46 fund houses. In one fund house, you found some irregularities. Mutual funds have been around for 25 years, 27. I think 1993, 94 is when they got the approval. So they've been around for a long time. And it's only rarely that you come across these kind of serious misdemeanors. And this, until even this, for as of now, is all rumors, right? I mean, 2 people have been sacked is all we know. But if somebody tries to argue the other way, which is look at you and say, what have you found out so far? What has come out so far? What is disclosed? There's hardly much. We are all assuming that yes, because we know a little bit here and there things go wrong, and we know that that not everything all the time is above board in any part of the financial sector. The biggest scam in this country has been public sector bank scam, which is 20 lakh crore of bad loans, and this is nothing compared to that. We haven't stopped banking with public sector banks, right? So my one line answer is that this has nothing to do with this. One small episode would have nothing to do with the big question that you raised.
Okay, fantastic. And Manoj, your thoughts?
Yeah, I completely agree with Debashish. Mutual fund industry, has survived much serious scams earlier, because those are all isolated instances and they work under the regulator in a tightly regulated environment. So I completely agree that, mutual funds continue to be a good vehicle, but there would be instances, accidents that have happened in the past and will continue in the future also.
Okay, thanks, Manoj. Farquhar, what do you have to say? You have a very trenchant article.
So I would have wanted a different kind of question from you. Mutual funds, Sahi, and no doubt. Because wherever there is a financial instrument, there would be a bit of impropriety here and there. You can't basically curb it completely. So 99% of the mutual fund industry is clean, but then 1% rotten apple is everywhere. But the question to ask is क्या fund manager सही है?
Okay.
Because fund manager is once you buy a mutual fund manager is one of the most overlooked people in the system, and it's up to him what happens there. Wherever there has been a goof up, fund manager has been a problem.
But you have checks and balances, right?
Yes, checks and balances should be. And what investor should do is check क्या fund manager सही है.
Okay, fantastic. Okay, but then let's go to the next area. I'll try to keep this as short as possible. You have written let's say, what shall I say, an article which talks very badly of Axis Mutual Fund. So would you like to explain as to what the contents of the article are and why did you come to that conclusion?
So I have not come to conclusion. I have asked some pointed questions at them. So first thing, if you look at the fact that the Axis, the voice is echoing. So if you look at the Access Mutual Fund, they, according to their own statement, they had started suo motu investigation into the matter from February. And it was not until there were murmurs in the media circles that there is something wrong with Access Mutual Fund that they publicly changed the two fund managers. They suspended them. I'm just wondering, had it not, the murmurs not made it to media circles, investors would have been in a complete blind about this thing. The second thing, if you look at one of the fund managers, Mr. Joshi, he manages ETFs. So to front run in ETFs is practically not possible without the active support from somebody from the equity side. So they will have to check that also. ETF is a passive fund. So it would not have been possible for him. The third thing, why is, company is saying that don't pay heed to the rumors. The company should actually come up clean with this, with the status of the investigation, what has happened. All their statements have been anything but vague.
Okay. So fine. You are faulting the company and their systems.
The process, there have been process lapses.
Yeah,
no doubt.
So okay. Debashish, you have written in your article, obviously you're coming from the other side, which is the regulator side. You accuse them, rightly so, of them sleeping and causing whatever mess has happened, or has happened in the past, or happened now, and will happen in the future. So what are your thoughts?
No, not in this particular thing. I've actually gone beyond that. I have not blamed SEBI for this thing at all, because, as I said, we hardly know anything. What I mentioned in passing is that the structure of regulatory action that we have today, which is that SEBI will get to know of something, they will issue a show cause notice, they'll get replies from those people, and they'll issue an order, right? So this entire process, I have not elaborated any of this in this article. All I've jumped this thing because I assume everybody is seeing what is happening. Reliance got an order after 20 years, all right, of something that they've done in 1999 or 2000. The order came last year.
That's correct.
Now this is a joke. This enforcement, what is actually happening in real life, in practice, and that's where we all should focus on, and that's where I always focus on, rather than what is there in the books or what is supposed to happen. I just look at what is actually happening on the ground and draw my own conclusions from that. So either the investigation is too long drawn, and or the order is too weak, as we have seen in the NSE's case, as we have seen most amazingly in the case of NSE buying a stake in CAMS. If you remember that, there were 4 or 5 orders. Each of them, NSE had to pay up just 1 crore penalty, whereas they were making some 2,500 crore profit in the CAMS transaction on their books. Okay, some they sold earlier, but essentially they had a capital gains of 2,500, against which SEBI said they should not have bought CAMS. They had no business buying CAMS, and they paid a penalty of 1 crore. So this is a joke. And the third thing that happens is, you can see all this. This is not my opinion. These are all facts out there. You only have to draw your own conclusions as I'm drawing mine. Third thing is the example of the rating agencies. The rating agencies downgraded certain paper from AA right to D in a matter of weeks. And SEBI had put in a penalty of just 25 lakhs. The case went to SAT. SAT brought that further down. SAT, the great, in their wisdom, they said that they said that they downgraded, right?
Okay.
They were a little late. That's all.
Yeah.
Now, rating is a time-specific thing. If you are late in downgrading, there is no point in rating at all. What is the meaning of rating? So even this elementary thing it has escaped honorable judges. So I'm saying this entire, if you really want to clean up the system, you have to think of alternative remedies. And I said that, well, if assuming Ministry of over and above SEBI and SAT is Ministry of Finance. So my point is very clear. If Ministry of Finance at all wants to clean up, this is too small a thing to occupy their attention, for instance. But if they say, okay, we want to clean up something, if you want to clean up something, you have to follow the money. The guy with a red Lamborghini and 14 apartments in and around in Bombay can be easily fixed. Honest tax-paying citizens, senior citizens, are being harassed by the income tax department for small things. And here we are. It's very easy to say, show me what is your salary, what is your wealth. Either it's in his name, in which case he's fixed his returns. If it's not in his name, it is under Benami. The rules today are draconian. They can seize your properties. They can, in fact, even income tax department today can. There is an actual live case. I mean, actual case. Okay, real life case. They told ICICI Bank, this guy owes us money. It's an under dispute. Okay, it's a tax dispute. You pay us the money from his account directly. Have you ever heard of this? But this kind of overreach today, investigative agencies are doing. They are for good. They are doing it for marginal cases. These are egregious cases of corruption, if at all it can be established. But it's very easy for anybody other than SEBI. Although SEBI has powers of search and seizure, they don't use those powers. Okay, but this is very easy for enforcement and income tax to get together and do it, and that's all you need to do. That where is this money? Is it legitimate? It is not. Is it not legitimate? That's all. Once you go down to the root of this, that somebody has acquired wealth which is disproportionate to his income, it's not accountable. This is such a message that you send across throughout the industry. And this long drawn 20-year thing, go to issue a show cause notice, go to SAT, hire top lawyers, get it overturned, you know, and nothing happens, Tariq Petari, all that you can cut through by this process. So my point about this is that a cleanup requires following the money. And today the investigative agencies have absolutely, as we know, as you know, average taxpayers know, they have draconian powers. They can open any, I mean, earlier there used to be a time limit for tax cases. Now they have removed that time limit in certain cases, and you don't even have to prove. You can arrest without an FIR under GST. So I'm saying in general, the investigative agencies and enforcement people have much more powers today than they ever had. And if they want to fix, they can fix very easily. And this, it has to be done this way rather than the normal routine way in which financial crimes are being pursued.
Okay. Devish, you are talking of enforcement directorate, enforcement, SEBI and all that. Manoj, I just want to ask you, see, while Debashi says, they have the powers to search, seize and this one, why can't the SROs, I'm sure you are a part of that, the AMFI, or even the Access management itself, find out that these fund managers have, let's say, wealth beyond what shall I say? You can make out, right? If you going around in a red Lamborghini, obviously you are able to make out. Why are they not taking care? Forget the SEBI and Enforcement Directorate and Finance Ministry. Why not Access Mutual Fund itself for that matter?
Surely. So, let's first go to the timeline of this specific instance and let's try to see what do we learn from this, both as investors and as industry participants. Okay, so the timeline of this event, and I do agree with Debashish and Rukan also on that, it does not really paint Axis Mutual Fund in good light. And the reason I say is that, what they state is that the timeline is that in their internal audit in February, they found some process violations, and that led to them suo moto proactively appointing two external forensic auditors. Now, they are not calling it forensic auditors, but they are saying external investigating agencies. But in their internal audit, they found something that demanded or that needed two independent global agencies to be appointed. That itself was a red flag in my view, that they had to go out and appoint two forensic auditors to investigate this matter. Now they say that these people were appointed in end of February proactively by the Axis Mutual Fund because they thought that there was something wrong. That is the Axis AMC. So obviously they had informed their board of directors and board of trustees that there seems to be some problem. We are going ahead and appointing two forensic auditors. Now that forensic auditors have now been investigating internally for the last 10 to 12 weeks. 3 months have gone by. And Axis Mutual Fund now has said that based on the initial preliminary kind of inputs that they have received from both the external parties, they have taken again the action on these two fund managers and suspended them. And they are saying they have suspended them because the investigation is not complete. The investigation by these two external parties will be completed only after another 5 to 6 weeks. So they are saying these are all proactive actions taken by Axis Mutual Fund itself, and as per our understanding, SEBI has still not acted. It is just that Axis Mutual Fund has informed them that this is the investigation that has been appointed, and they have told SEBI that we will come back to you with the whatever the findings. So where I see is that clearly one is Axis Mutual Fund is definitely acting proactively, except that as rightly Furukan also said that the timing does seem that because it came in the media, they are now saying that the fund managers have been suspended. And it could have been that they are already on their way out. We don't know that as a fact, but the timing does seem that Axis Mutual Fund has acted based on because it was coming out in the media, and otherwise they would not have. The second important thing that it seems is that though there was an investigation against some people going on, but they had all access during in the interim also. It's only right now in the last 8 to 10 days their access to Bloomberg terminals or trading was stopped, but they were otherwise actively in doing everything a normal person does in his own entire thing. So that again raises questions that on the entire thing. And the last thing I would say on your question of SRO and regulator, in my view, the trustees are the first level of regulators for every mutual fund. And if there is any, and it is duty bound, it is a part of the responsibility that whenever trustees see any material development happening, and in our view, it is a very material development that they had to call in two external investigating agencies of global repute. It is yes or not, as per what we understand, is that there are two global agencies which have been appointed, and we believe if it was a very material development, the trustees should have taken upon themselves and informed investors saying that this is what we are proactively doing, rather than waiting for. And right now also I don't think trustees have taken, because trustees are the first level of guardian for investors. They have still not communicated with the investors. There is one letter which has gone out from the Axis Mutual Fund, Axis AMC. So I'm saying that yes, Axis Mutual Fund has acted proactively. At the same point of time, it does leave a set of gaps, saying that was it really serious in communicating with their set of investors of what is happening.
Yeah, thanks. Debish, before I go for Furkan, but I want to ask you one other question. See, in your article, you mentioned about the Franklin Templeton. And while the mechanics may be different, finally the trust deficit was there. So there too, the trustees seem to have not acted. Can you throw some light on that?
That mutual fund trustee issue is a big problem, and it's not something that SEBI has focused on. There is a lot to be improved over there, and we are only talking about these couple of episodes. You remember, and as Manoj was saying, the mutual fund industry has gone through more crisis. In each of those cases, the trustee's role has been found to be wanting. So, unless, once again, I'm a firm believer in what is otherwise called exemplary action, an action that people remember and people are scared of in future. So unless we see that, this is not going to change. I mean, frankly, mutual fund investors should expect nothing from the trustees.
Okay. Being very skeptical.
Yeah,
that's reality.
See, it's on paper. The trustees are there to protect your interests. Trustees are not chosen by mutual fund investors, and they are not there. They are close to the AMC, and they are not close to you. So it's a simple fact of life. So it's the same as in company board of directors. You can call them independent, but effectively they are much closer to the management than they are to. So unless somebody brings in from the beginning a certain very die-hard pro-investor orientation, and I think that would be an exception. So I don't have such kind of expectations from anybody, and they wouldn't be appointed in anyway in the first place. So people who are really pro-consumer or pro-shareholders don't get the appointments of these kinds. Okay, they are kept out rather. So that's how the world works. So I wouldn't say that the trustees. I wouldn't say that. The reason my expectations are really too low, as I said. So I'm not really too incensed about what trustees are doing or not doing. I would rather see some action, uh, by the regulator, so that in future all trustees tell each other, sorry, we can't do this. This is not done because the consequences are severe. I would want this kind of a conversation happening inside companies, inside mutual funds, wherever they are regulated. But this kind of conversation does not happen because you eventually the new thing that has happened in the last 5-10 years is that the lawyers have become very influential, very expensive. These organizations are large, very profitable. So there is a capture. There is eventually a regulatory capture.
Okay. So we have no hopes.
I mean, the hope is in the sense that if you see, my point about all of this is on a very narrow context. If you want to bring these things down drastically, almost eliminate, then that is a context I'm talking about. But without that also, by itself, there is no, mutual funds are cyclical, market goes up, they'll give you a good return. If you stay too long in the bear market, you will get a low return. So essentially, it's a tool for you as an investor, which is a completely different discussion altogether. Open any mutual fund portfolio. There are a large number of stocks. Most of them are okay. Uh, they are, they'll do well if the market is trending up. So you have nothing to complain about that time. So essentially, this is what you get, and there is no change in that. We are discussing about an exceptional situation where there is corruption or where there is malpractice and how to control that. That, I'm afraid, is not going to get controlled so easily because of this regulatory capture. But that does not mean that mutual funds will not do well over the long term for you, because if the market goes up, the NAV will go up, and you will be all right. So there are two independent issues.
Okay. Fargo, I just want to ask you. You have obviously come up with this investigation into Axis. So I don't think there is only one cockroach, right?
Yeah. Well, see, it is up to SEBI that, SEBI has to. In fact, I will be talking in detail by next spaces at 6:30 about the same. That's why I logged out at Monday context. So basically, SEBI, what adding on to Debashish's point, which has been rightly put, SEBI has a lot of work to do. In its previous avatar, till February, we could see, frankly, Templeton, Manoj has a lot of know-how about that. Franklin Templeton case, Macaulay's, one of the conclusions that SEBI came up with was that they had calculated Macaulay's duration in those 6 schemes wrongly. And if you go back to the data from, Morningstar or Value Research, you get the data from them, you will realize that their macro-based duration was wrong from the first day. And then they had invested in the junk bonds, in unknown companies, their all those 6 funds were skewed in favor of investment grade bonds. So what was SEBI waiting for this blow up? What happened at Franklin Templeton to act? They had, as an enforcement agency to protect the investors, they should act before the mess gets real. So as I have said in the case of RBI, I would say it applies for SEBI as well. They don't have to be reactive always. They need to be proactive. So in this case also, SEBI has algos running. Front running can be detected through algorithms. So why was this run, if there was a front running case as is alleged right now? Why was it not detected by SEBI and the exchange through their algorithms? So there are tough questions to the regulator as well.
Okay. Manoj, I just changing gears now. See, I got some set of data from the institutional brokers and from hedge funds guys. I was just looking through the concentration problem. You see, I believe there is one AMC which is owning 54% of Bajaj Finance across all AMCs. If you take it up, 54% is concentrated in one AMC. Bajaj Finserv 74, Info Edge 77, 87 in Pidilite's case, DMart 68%, SRF 58%, Astra Poly. These are all above 50. I have taken data. I have data, in fact, below 50 also. Between two AMCs, Chola Finance is taken 51% of Chola Finance floating stock in the two AMCs. It goes to between the two AMCs. Divi's Lab 74%, BEL 54%, India Hotels 50%, NTPC 62%. The list goes on and on. Above 40, there are 20 stocks, including my favorite ITC. I'm just wondering, I mean, should we not have some self-regulation or something? You see, this smacks of a little bit of manipulation. See, you are cornering the stock and you can do anything with that stock and then everybody has to follow you. Is that a worry feature? For me, I thought it was very worrying because when the fund managers change, for instance, obviously the fund managers will move around with their favorite stocks. So some of the stocks may just be sold and then there will be no buyer. So you will suddenly see some big falls coming in these kind of stocks, especially which are relatively illiquid. What do you think about this? Don't you think this is a very big problem waiting to explode?
Yeah, in terms of concentration, there are two levels of, safeguards that are put into place. One is from SEBI in terms of how much of concentration is allowed. And B, and more importantly, the investment committees of various mutual funds, and they also have risk committees, separately risk officers who monitor the, kind of safeguards that are put into place. We have seen this problem of concentration risks emanating in the past also in some of the mutual funds, and especially as you highlighted some of the cases, where a fund manager changes, and that has happened in a couple of mutual funds where, there were some illiquid securities in equity markets. But I think broadly this problem is fairly well encompassed, and most of the, onus lies on the mutual fund itself rather than the regulator. The mutual fund has to deliver on the liquidity of the portfolio. It has to deliver on the concentration risk of the portfolio. Of that. And though it is not related to equity, but as rightly Furkan said, one of the problems that Franklin Templeton was facing was that their internal problems of the risk committee being overridden by, the fund manager and others, and that being allowed. It's more of a cultural issue in some of the mutual funds, wherein, the fund manager becomes bigger than or has such a veto power that he starts overriding the risks that are highlighted by either internally the risk committee or not. Too much of stifling and too much of micromanagement by the regulator is also not really great. And at this point of time, SEBI does micromanage a lot of activities in the mutual fund industry. And to an extent, I think there has to be a fine balance wherein SEBI regulates it by giving directions or giving guiding principles, and each of the mutual funds sets its own parameters in terms of the micro decisions, what has to be done. So I think a lot of that onus lies on each mutual fund, and hence, as we started rightly in the beginning, and Kurukan highlighted that, to make a generic statement that mutual fund sahi hai does not make really sense. It has to be each mutual fund house and each fund manager that we look at and identify, who are the people who have the right culture, the right thought process, and who are really doing this well. Broadly, yes, well, at this point of time, since mutual fund is a new concept, still a new concept, though some may say that, mutual fund has grown phenomenally in the last 20, 30 years. But even now, the number of unique investors in mutual funds, as AMFI estimates, is around 3 crores. Whereas if you ask an independent agency, the independent agency is estimated less than 3 crores, around 2 crores is what it is. But safely to say, we have somewhere between 2 to 3 crore unique investors who have invested in mutual funds. And there is a long way to grow, go here at this point of time. So that's my thought on that.
Yeah, Manoj, I want to scratch this point further here. Yeah.
I wanted to bring in a point. I wanted to add on to Manoj's point, in fact. So if you look at risk, which you have valid, in fact, I have mentioned it also in my copy, the risk concentration in various stocks. There are two stocks, Deepak Fertilizers and Igarashi Motors, where Axis Mutual Fund owns 100% of the active domestic mutual funds. And then there are 22 stocks where they own more than 50% of the active domestic mutual funds. I mean, this is the biggest joke on the, basically risk mitigation in any mutual fund house. And over and above that, to add to the, in Axis Mutual Fund, the compliance officer was reporting to the CEO. I mean, ideally, he should be reporting to the board. He should be above the CEO. You can't be reporting to CEO when you are the compliance officer.
Okay, yeah, this is the point I wanted to scratch for. That is, you see, there is one thing about the concentration in terms of, say, your fund cannot invest more than 10% of the corpus in a particular stock. That is one thing which we know. When we get the fund data, we get that data which says how much of it is there in a particular stock. But what we don't know is how much of the cornering has been done by a particular AMC, which you mentioned. Nestle also, I think, was you mentioned
83%. 83%.
Yeah, which with I think Ira Dugal, when you were having that conversation, I went through that. So I just correlated with what data I have. So this data is much more dangerous, I would say, than to have 10% in one stock is okay. That is not a big issue. Warren Buffett has got 50% of his portfolio in Apple. If it is liquid, you can have more than 10. There is no problem. But if you try to corner, which you have done, which they have obviously you have got data, I have data. Don't you think a time has come where the regulator, maybe Debashish can tell on this, we should insist that while you are going to tell me that it will be less than 10% in all the stocks, you should also tell me what.
So are you there? Am I audible?
Yeah, shake up.
This kind of information to be shared, that what is the concentration you have vis-a-vis the entire MF industry, rather than just say I have less than 10% of my AUM in a particular stock. Debashish?
Yeah, you have a point. No doubt about that. But I really haven't applied my mind to it. So, frankly, I have another point to make, which is that that a lot of emphasis have been given in the last few years on advisors and distributors. Okay, so I would say a lot of these metrics and a lot of this analytics should be done by those people when they and it should be incorporated and when they recommend funds for their investors. That's the way it should actually work, in real life. Because how much can SEBI keep laying down in terms of rules and then ensuring the compliance and so on? There's no end to it. So the idea is to encourage distributors and advisors as a key link between the fund houses and the and investors, and they are the ones who should have these analytics and then recommend on the basis of that. That would be my view. But the finally, I still feel that the real remedy for all of this is internal. So if something happens, the punishment or the penalty or the hurt should be so much that the others do not repeat that. That is the only way to fix any of these things, which is across the board. I'm not talking only about mutual funds or any other part of the financial sector. If you are seen to be getting away with it, everybody else will try the same trick. I think we should think of that first. I mean, I still can't get over the fact that the rating agencies have got away with what they did in case of ILFS and DHFL. I don't think there's a bigger scam than that.
Okay, yeah. So Manoj, I was not talking about that 10% concentration risk as much as this, across the industry. Somebody owning 87% of Pidilite or 77% of Info Edge, SRF 58, Bajaj Finserv 74. Don't you think there are some red flags here on two bases? One is, the fund manager has now captured it, or the AMC has captured it. So he will decide like a Pied Piper as to what the price will be finally, because that is not available in that universe, right? So he dictates the price. So don't you think in a downturn, if if the fund manager changes and if they want to sell, they will find no buyers?
Yeah, I'll tell you the figures that you're referring to, are figures for the holding of, for example, if there is a stock, well, I'm just giving a hypothetical example. If there is a stock and the, market capitalization of that stock is, say, just for the sake of assumption, 1 lakh crores. Okay. And all mutual funds put together, for the hypothesis, let's assume they own 5,000 crores of that entire thing.
Yeah.
Okay. And out of that, if you say out of that 5,000 crores, there is only one mutual fund that holds the entire 5,000 crores. Okay. So, and that is the figure you're referring to of
That's
the
correct.
concentration.
Yes.
Okay.
Yeah.
So that can be seen both ways. So it is not that they can manipulate the entire stock. You can only manipulate the entire stock if you hold a large portion of the floating stock. Okay, which is typically in the large cap companies and even mid cap companies. There are, as I said, one restriction is 10% of your portfolio. The second restriction on SEBI is also what portion of the each company mutual fund can hold. Okay, so that is a second restriction. And you are referring to a point that there is, for example, there used to be a case where I don't want to name any mutual fund. So there was one mutual fund which used to hold unique stocks. Okay, that is, they were the sole holders of those stocks within the mutual fund industry. So, for example, there was stock A. They were only the mutual fund who used to invest in that. But it was not that they were investing or cornering the entire stock. They used to hold 1% of that stock, and on a particular day, for example, even in the space, you gave example of Bajaj Finance or Bajaj Finserv, and then let's assume that a large portion of it is held by, well, in my view, so Bajaj Finance is held by every mutual fund scheme now, or HDFC or HDFC Bank. But I'm saying that is an independent risk. That also you have to give credibility to the fund manager that he is holding some unique stocks. If we put a cap there also saying that you can only buy a stock if it has been bought by another mutual fund and there has to be a diversification there, I don't think that, in my view, that is not fair. Okay. And as I said, there are limits on how much of your scheme of 10% you can hold, how much of a company you can hold. Those limits are already there. Okay. And mutual fund industry, today manages around 18-19 lakh crores of assets, in equity schemes. Okay, that is the equity in the equity markets. That is say 5 to 6% of the entire market cap. If you look at the entire insurance industry in India, they manage another 20 lakh crores plus. So they actually manage almost equivalent amount of money in the equity markets. Okay, and we really don't track, or investors don't track it as closely as what are the kind of stocks that they are owning and what are the limits. In fact, there is a regulatory arbitrage there, and insurance companies actually have more leeway in terms of holding. So I personally don't think the point that you made of concentration risk by, for example, if there's one stock only one mutual fund holds, it will say that it owns 100% of that stock of all mutual funds. But that does not mean anything because the floating stock will be very large, the market cap would be very large. In no way can that mutual fund influence the price of that particular stock. Now, there are some cases when mutual funds do try to, whether it's NAV management or, that happens. That is a separate thing, but those are exceptional instances that some of the people do.
Yeah. Farko, you got a counterpoint?
No, so basically, see, it's not more about uh, influencing rigging the price of the stock, but it's about their own risk mitigation rather than influencing the prices of the stock. So it's not possible to influence prices of the stock by having high concentration this way, which I agree with Manoj there. But this goes beyond the principle of risk mitigation for a mutual fund house.
Okay, we are coming to the almost the end of the program. So, what should investors do? Okay, we've understood regulators should do that, AMC should do that, trustees should do that. So, what should investors do now?
So, the first point I would want investors to do whenever they buy a mutual fund, have a closer look at the record of the fund manager, what he has done in the past, how aggressive his bets have been. Is there some kind of pass? And this is the most ignored part of the mutual fund investing. And even in the HNIs, they don't check this. When you go to a brokerage house, and your broker tells you we have upside of the 10-20% on the stock, and we recommend you to buy it. Does anybody ask them how did you calculate this 20% upside? What assumptions for that? So we need to ask questions. Investors need to ask questions first. That is the basic thing that they need to do. Ask questions.
Debashish, you want to say something on that? Because I'm not able to hear Manoj.
Well, I don't think anything changes because as Furqan said, the process remains the same. You have to do your due diligence, you have to do your analysis, you have to look at risk adjusted returns and all of that. If you are an investor in Axis schemes, I don't think you should react in a panic-stricken fashion. It's not that the all the schemes are being manipulated or there is something is going wrong. I mean, the portfolios are disclosed. You can see the stocks that they have. If you had no problems with the stocks before this event, you have no problems with the stocks after, right? So. So whether it's for Axis or whether it's for anybody, for Axis, if you're an Axis investor, you'd wait and watch. If you're not an Axis investor, nothing changes for you. You will probably take a look at it closely once again. If you're an advisor, you have to ask the advisor. If you're a distributor, you ask the distributor, what have you sold me? As for says, ask a few more searching questions. Nothing significant changes according to me.
Okay, thanks, Debashish. What about Furqan?
I just said Manoj is to say still.
Yeah, sure. So I'll just add on. I completely agree on both the counts, and honestly, I think broadly I agree more with Debashish in saying that the regulator has to be more decisive the fines and actions have to be not in this particular case, but broadly as a guiding principle. They have to set stiffer fines, and they have to make the environment. If somebody decides or has this thought of trying to bend the regulations or go into the gray zone, they should really think twice before doing that, and that would automatically make the environment a little safer for investors also. It has to move from our current thought process. In India, the entire thought process is that, where we say the buyer has to beware and he has to do his due diligence to the last extent. Even in the insurance industry, even the mutual fund industry, as you all say, the portfolios are disclosed. I mean, we always put the onus back on the investor, saying that, boss, everything was out in the open. Just because transparency is there, that does not take away the onus or the responsibility of the mutual fund house. Is what I would like to say, and that's why I agree strongly with Debashish on that. The regulator has to have a more quicker way of addressing this issue with much more stiffer fines.
Furqan, anything, any comments?
No, I made that investor. So it has to be ecosystem that has to change. I mean, I agree with both of them. The regulator has to buckle up, which I believe of late in past couple of months since we have got a new SEBI chief, I'm seeing a different tone and tenor of the SEBI currently, which I'm hopeful that this will continue and we'll have a bigger course correction. And then mutual fund houses, there are self checks, and I'm pretty sure the 99% of the mutual fund guys who are upright and correct, they will make sure that these 1% rotten apple are just sidelined. And the third thing, I would also say that investors should be cautious before investing. They should ask a bit more questions rather than blindly go about investing.
I think Debashish, Money Life is doing a fantastic job of educating the investor and taking care. I think probably more people like you should be there, or more Money Life should be there all around, so that investors are better educated in that sense. So last round, final comments from you, Debashish, and then I go to Nagpal, and then Furqan, and then we go for the question answers. Debashish?
I made my points. I don't know what more is there to say.
Yeah, it's okay. Yeah.
We both, all three of us, more or less agree on the regulatory part, on the and especially I like what Manoj said. I had actually written a column in Business Standard 5-7 years ago that it should in fact be sellers beware, and that should be the philosophy. The regulation should structure around that. I'm sorry to say that not only have we not moved towards that, we have moved far away from it. And given the fact that we have 33 broker defaults in 2 years in NSE, and continuing problems in every aspect of the financial sector, it has got worse.
Yeah. Okay. Thanks, gentlemen. I think we have come to the close. So all of us agreed that mutual fund Sahi hai in the beginning. I'm sure all of us are agreeing the same way there. So there's no point of disagreement there. Thank you, Manoj. Thank you, Debashish. Thank you, Furqan. Now Abhishek will take over, and we'll have a few questions. We will hard stop is at 6 o'clock. So let's start with the questions. Abhishek, take over, please.
Yes. So let's start with Vipin and Sharad sir, and then let's go with top trader after that.
Yeah, Vipin bhai.
Yes, sir. Sharad sir को पहले देते हैं.
Okay, Sharad bhai. He seems to be not there. Vipin bhai, you can ask the question if you have a question. Vipin bhai?
No, sir. कोई क्वेश्चन तो नहीं है. जिस तरह का सर लोगों ने इनपुट दिया है, उससे ये तो समझ में आ रहा है कि प्रॉब्लम टेक्निकल लेवल पे इस पूरा जो भी म्यूचुअल फंड का सेटअप है, जिस तरह का इंफ्रा है, जिस तरह के रूल रेगुलेशन है, काफ़ी कॉम्प्लिकेटेड है. हाँ, अगर एक इन्वेस्टर की नीयत से मुझे समझ में आता है, तो जिस तरीके से मैंने इसको रियलाइज किया कि कैसे हम यहाँ पर अपने आप को प्रोटेक्ट कर सकते हैं और क्यों होना चाहिए। क्योंकि अगर मैं किसी भी इन्वेस्टर की निगाह से सोचता हूँ, तो मैं इतना आसान नहीं है स्टॉक को चूज करना, फंडामेंटली उसको ट्रैक करना, उसको पोर्टफोलियो में डालना, निकालना। है सही तो यही है, लेकिन इसका एक सही तरीका ऐसा होना चाहिए, कुछ ऐसा कि जैसे हम बास्केट की बात करते हैं, अगर हम टॉप 10, टॉप 20 जो भी चूज करते हैं कि ये फंड्स हैं, इनके परफॉर्मेंस ये है, अगर हम पैसों को डिस्ट्रीब्यूट कर देते हैं 10 टुकड़ों में, 20 टुकड़ों में, तो वो शायद हमारे लिए सेफ्टी है। क्योंकि जिस तरह के भी स्कैम होंगे, अगर किसी एक में भी होंगे, और हमारे पास अगर 10 अलग अलग इक्वल म्यूचुअल फंड है, तो हम मेरे ऊपर 10% पे ही इम्पैक्ट आएगा, ना कि बाकी सब पे आएगा। और ये तो सिस्टम है, फाइनेंशियल मार्केट है, स्कैम तो इसका सब खून है, ब्लड है। ये सब चीजें तो चलती रहेंगी, इसको कोई रोक नहीं सकता, ह्यूमन कैरेक्टर है। बट एक इन्वेस्टर के पॉइंट ऑफ व्यू से मुझे लगता है इक्विटी मार्केट से लाख अच्छा म्यूचुअल फंड है। और म्यूचुअल फंड में भी जितने टुकड़ों में पैसे इन्वेस्ट करें, जितना बेटर हो, वही सही तरीका है। बाकी कोई क्वेश्चन होगा तो सर समझ में आएगा तो मैं पूछ लूंगा।
Yeah, thanks, Vipin. Sharad Bhai?
Uh, I think that this system of front running is prevalent in all mutual funds. It's not restricted to Axis. Axis में पकड़ा गया इसके लिए, but it is prevalent everywhere. Every day I hear the fund manager is buying this, that. So this is a widespread problem, and SEBI should do something about it. Otherwise, all money will be transferred to the fund managers, and the investors will lose out. And another thing is, there has to be some accountability. What was the CIO doing when he was accumulating Avenue Supermart or Divi's or Bajaj Finance? What was the CIO doing? He is scot free, and the fund managers are in the dock. So I think the whole system has to be revamped, and everybody who's responsible should be made accountable. And for sure, the CIO is the culprit. It was under his supervision things were done. So I think the CIO is, that's it.
Thanks, sir. Just a few thoughts on this one. I think the cornering of shares that keeps happening. So I used to wonder at that time when Bajaj Finance was at 19,000, 18,500. I used to wonder what is there in the stock. कि क्यों नहीं गिर रहा भाई, क्यों नहीं गिर रहा? So I am basically a bear. So I just wanted to understand the logic behind it. So then one of my friends who happened to be an investment banker, he told me कि ऐसा cornering होता है stock में. एंड देन वो लोग गिरने नहीं देते ताकि उनका जो ये होता है, क्या व्हाट यू से, योर एनएवी, वो ना, हाँ हाँ, सो दैट कि वो ना गिरे करके वो लोग उसको पकड़ के बैठेंगे, एंड व्हेन दे वांट टू एग्जिट वंस एंड फॉर ऑल डंप कर देंगे, तो तभी वार्निंग नहीं मिलेगा, कुछ नहीं मिलेगा. सो आई थिंक एज अ बेयर यू जस्ट हैव टू होल्ड ऑन टू योर पोजीशंस अंटिल दैट पॉइंट ऑफ टाइम जब वो इन्फ्लेक्शन पॉइंट आए. So that is about it. And I think this cornering of shares has happened in a lot of these low float companies. जैसे अपना Dixon हुआ, और ये ऐसे Senx also mentioned Polycab and a few other stocks. This is bad क्योंकि जब भी ये, whenever it breaks, it just pours. It doesn't go down very gently, I would say. Yeah. Let's go to top trader.
Yeah, so actually, this problem is not huge. It goes on from that beautiful episode by Jaspal Bhatti, Golgappa kind of thing. But coming on to this problem is that this front-running problem is actually there in US also. They actually launched this exchange also. I think it was 10 years back, where this front-running can be stopped through systems. So here we are actually noticing only ETFs and mutual funds which are doing it. What about programs which are actually snooping in and checking who's buying and selling? So there's a huge overhaul which is to be needed, and you got to understand. Even NSE scam was pointed out by some smart trader only, if I'm not wrong. Correct me if I'm wrong. but some kind of vigilante system or ombudsman kind of thing where they can actually see how this fraud is actually happening before it happens, and you got to replicate it. Like you got to show it in real time to point it out, and it should be penalized. But I doubt it. It's been going on. If I'm not wrong, from the 1990s, it's been going on. It happened in the bond markets, and it's happening currently in the stock market. All these fund managers actually tell the truth when there is a crisis. So what was the last point of crisis was Yes Bank. What really happened over there? No one knows exactly. And surprisingly, DHFL fell at that time. So it can be an individual problem, but you see, the whenever the interest rates spike, that's when all these issues start coming out in the open. But what about the good days when interest rates are suppressed by all central banks? So my question is, does anyone know what's happening in HDFC and HDFC? Why did they do a merger just before interest rates on the 10-year yield spiked from 6.8 to 7.5 recent times? So it's very confusing. If somebody understands how this is going on, I think I would love to hear it. Thanks.
Yeah, Manoj, you want to take it on, or Debashish, or anybody?
I would say let's focus on mutual.
Sorry, can you repeat
I'll
that?
be focusing on mutual funds only here right now, not transgress into HDFC
Right.
merger.
Okay, no issue.
Let me correct, Mr. Devishi. It's not about HDFC, or I'm not pointing it out. What I'm trying to say is this front running which happens. You can actually see not only it's happening in India, but it's happening abroad also. But here it is very. It's not known at all. So there is no catch 22 situation, or there is a way to actually get them before accident strikes. So this has happened in 1990s, if I'm not wrong, Mr. Devashish. You know it better than anybody over here, I'm pretty sure, or any veteran. So is there a catch? Is there a way we can actually control this? But there is no solution. Everybody says there is a problem. What about a solution? So there is nothing put up at how this front running can be stopped, because everybody is doing it. So that's where I'm trying to say. I'm not pointing out to one particular company. Nobody spoke. Thanks.
So, to
Debashish, you
stop
want to say something? Yeah. No, Furqan, you want to say something?
So to stop front running, I mean, there SEBI just needs to act. They have the softwares in place which based on algorithm they see the pattern in the trades, and then they can investigate. They can pick it up from there. So SEBI has algorithms in place. It can be caught through algorithms. It just needs some kind of intent from SEBI. And exchanges also have that algorithms with them. So all that is needed is intent.
Okay. So no intent, and there's no incentive for that, or rather, there is an incentive for keeping quiet. That seems to be the general drift, if I get that.
Am I audible?
Yeah.
So there is a pattern, so which algos can catch, and SEBI needs to buckle up there.
Yeah. Okay. Thanks. Abhishek, you want to call the next person? Is there anybody else who wants to speak? Or we close?
Fact finder. SK, you don't want to.
I have called him, but he is not come.
No, sir. He's just messaged me saying he's got a question for the panelists. About 18 months ago, the SEBI introduced a regulation of recorded lines. How come this issue of access appears to have happened now? There was regulation about 18 months back.
Manoj, you want to take that?
Yeah, surely. So, you know, I'd like to club a little bit of points here. Number one is that whether it's front running, insider trading, these are various forms where an individual or a group of individuals try to take advantage of either price sensitive information that they have, either from within the company, that is insider trading, or in certain cases where you have price sensitive information of a bulk order coming in and you act before that, or you think that there is some information that as people in the media have been caught or been identified, wherein they before recommending something on TV they go and buy it. So I think this is not unique to India, or unique to a particular market. Every individual tries to be smarter than the system. That's all about markets are all about. And some people toe in the gray side of the line, and some people try to completely do it illegally. That's point number one. Point number two, on terms of recorded lines, and over the last couple of years, there have been so many new regulations in India also. As Furkan also said, one way is algorithms that track, and SEBI does track, a lot of people and a lot of things through algorithms. But, algorithms also just give an indication to prove front running and insider trading in India specifically is tough, as Debashish highlighted, that cases go on for 10, 20 years. SAT overturns something, but the models, the artificial intelligence is being put into place on that side, and on the other side, regulations in terms of having recorded lines, not taking your personal phones inside, dealing rooms. Those are all things that are there. Now, it's also the implementation. As I said, there can be a rule. How it is implemented in a particular fund house, that is a secondary thing. You all have heard of the other debt case of a particular mutual fund, how debt securities were kind of dealt, and it seems that there were the fund house itself was also aware of these transgressions. So there has to be intent from the fund house also to implement this. And third, the last thing I would say, in the last 2 years, it has been years where even dealers have been operating from their homes. Dealers, fund managers, a lot of times have been operating from their homes, where the implementation of a lot of these protocols were made in an office environment. Okay, and suddenly when a dealer is, or a fund manager, operating from home, how do you enforce these guidelines also becomes another challenge. Now, how do you ensure that a person who's a dealer, who's supposed to trade orders in his home, one of his lines may be recorded, but now who controls him if he also carries another mobile phone? So I'm saying that those were in this particular case of Axis, I think that could have been one of the factors of transgressions that have been there in that case, because it was a new environment, and that gave an incentive to some people, and we don't know, as somebody rightly said. Now it has been found out for Axis. Now it is quite possible that other mutual funds, some other people may have done it. And as I always say, we always focus too much on mutual funds. The insurance industry has a much larger equity base. Do we also track, what are the guidelines there? Is there any front running there? Whether insider trading there? Is IRDA as a regulator as effective, or is it 2-3 steps behind SEBI in terms of implementation of all this? So I think, in spite of whatever happens, whatever protocols can be put, it's only that one can try to reduce this. Globally also, whether you go to developed markets or emerging markets, people do try to, get into this. In some of the places, in developed markets, the penalties are swift and very large. And that deters a lot of people into getting into this. And that has to be the direction which India also has to take if it has to go into a more structured market. I hope I could have answered some of the questions there.
Yes, sir. Yeah, you definitely did. One more thing I would like to point out. So the LIC IPO subscription date ended yesterday, and surprise, surprise, we have LIC has about 3.5% holding in Adani Transmission, and then just look at the top loser today. It's about 9% down, almost a circuit. Any
Yeah, yeah.
comments on this? What has happened over there? In
No,
fact,
no, I don't
me and
know.
my friends were
Wait. Abhishek, I don't know whether people would like to comment on specific stocks. That was the original idea that we will
yes,
talk only on this.
yeah, yeah.
Let's leave it at that, please. Let's leave it at that. Yeah,
Yes, sir, yes.
yeah. Uh, who else? RM? RM wanted to speak. RM, you have a question? Okay, I don't think so. Anyway, I think we have done with the question answers because I don't seem to have any other person who's raised their hands. So let's conclude here. In fact, I was thinking to go up to 2 hours. I think we have finished it in 1 hour, 20 minutes. Once again, thanks, Manoj, thanks, Devashish, and thanks, Farquhar, for coming and sharing your wisdom. I'm sure a lot of us, all of us actually, have taken a lot of it in the positive sense, and hopefully next time we buy a mutual fund.